Hello, everyone. This is the next episode of the Nomad Capital podcast. With me today is Stephen. Stephen has exactly the same portfolio as I do. So I tried to basically understand how people came up with this portfolio. And I also want to learn more about his long-term perspective. So Stephen, why don't you introduce yourself to the listeners?
Sure, I'm Stephen. I guess that's a bit redundant. I'm a I'm a school teacher in Northern Canada,
Mm-hmm.
and I'm I've got started in investing because my wife and I had to figure out what cash isn't always the best. A lot of people just hold cash, and I thought there might be a better opportunity, so I started learning about it, DIY finance stuff,
Mm.
and that's how I got into it. Really, I really like I like I like humanities and liberal arts, and investing. I feel like fits very well along those like languages, humanities, history, philosophy, that type of stuff. I think investing is kind of a practical application of those skills, and it's a very natural fit for me, and it was useful for my life. That's how I began investing, and that's my background.
Interesting. Do you mind if I ask, what do you teach at school?
Yeah, I did when I taught high school. I did reading and writing stuff, like
Mm-hmm.
whether English or social studies, history, civics, whatever country you come from or live in. That's people call it different stuff.
Mm-hmm.
And then I moved on to teach college, where I'm an instructor in a teacher education program,
Mm-hmm.
where teaching teachers to be teachers, teaching teacher candidates to become teachers.
I
That's what
guess
I do up here.
I guess you must be really patient, right? Because like if you try to teach something to people, you have to have a patient. And I guess in investing, you have to do the same. Like sometimes your stock doesn't go up every day, so you have to be patient. You have to wait for like longer period of time.
Yeah. Although I didn't have patience for grade sevens, so maybe it's not as long as I thought.
Might be.
Yeah.
So in terms of investment, could you tell us a bit how did you start it? Like which resources did you use, or maybe some
Mhm.
friends of yours help you with this?
Oh, thinking back, I did. It was just like a random guy in my town. The only other guy who knew anything said, "Oh, I've just came back from mine I worked at. They just opened this new thing. They have a stock, and they showed." So I opened an account to like buy 4 stocks of this thing that went down 50% the next day. And
Was it a mining company?
it was a mining company, of
Okay.
course it was. So very quickly learned the mining lesson, and then I eventually got to like the intelligent investor, and I got to the Buffett letters,
Mhm.
um, which were intelligent investors, a bit dense and a bit old, but it's a good one. The Buffett letters are long. There's so many of them, but they're all very useful. And the other the opposite of the intelligent investor, sort of, I found was the 100 to 1 in the stock market. I think it's by what's his name, Phil Fisher, or no, I always get his name wrong. Something Fisher,
Mhm.
and it's kind of like it's about growth stocks, and having a instead of like why would you why why go for a 50% gain on a cigar, but um you're not aiming high enough. Like you're not aiming to sort of win, you're aiming to get wealthy over time. And he makes the argument that the 100 baggers do exist, and here's some of the characteristics of them. And so those 3 things were some of the bigger ones. But I also wrote for Seeking Alpha for a year.
Oh,
I read. I started a sub once I was done with Seeking Alpha, because they wouldn't really let me cover Canadian small caps. I started my own Substack, and got a bunch of, I don't know, I can't remember how many subscribers I have. It's in the hundreds though.
yeah. That's
And
how I found you actually through the
oh
Substack.
really? Okay.
Yeah.
Yeah. And yeah, and then also the the best resource, which I think you know of as well, is Hedge Fund Tips with Tom Hayes.
Of course.
Uh, it's like if the Buffett letters and the Buffett partnership letters are like a travel guide to Paris, say, Tom is the tour guide when you're there. It's it's on another level. It's phenomenal.
Yeah, and I still believe not many people heard of it, so I will definitely put some links below for people to
For sure.
listen for some of
And,
his
and
podcasts.
just so those people know, I'm the video editor for the podcast, so it's sort of a plug as well.
Really?
Yeah.
Wow, I didn't know.
I'm actually just transitioning out of it
Hmm.
because I'm getting busy, but yeah,
Nice. So you had a like, opportunity to talk to Tom directly, right?
yeah, yeah.
Nice.
He's a busy man, so we don't get to say much, but he's he who he is in the podcast is who he is.
Hmm.
So
Yeah, really great, man. Like I learned a lot from his stock picking. Like before him, I've been reading like Buffett letters, some financial courses on YouTube, just to understand
right,
like what the free cash flow is,
right,
what debt is, because my background is
yeah,
in software engineering, so those
right,
terms were kind of new to me.
right,
But he actually told me like how do I research individual company,
right,
and I've never kind of thought about looking at the individual CEO, their history, like are they trustworthy? Do they do what
right,
they say? And
right.
yeah, after listening for, I don't know, like 100 episodes of his podcast, it's like, yeah, completely changed my mind. Now I do
Me
believe in
too.
people instead of just in individual
Yeah,
tickers.
yeah. I thought learning accounting was kind of time consuming and difficult. Like I did this like this casually did kind of this the important parts of the CFA books and like the took and did some books on accounting or whatever. Um, and then I get to Tom's podcast and it's like, yeah, the numbers all look great, but I'm telling you, there's something wrong with that guy. Pass. And it's like,
Exactly.
oh man, there's so many levels to this.
Oh,
Yeah,
yeah, my wife, she's in a finance, so she used to work for Deloitte and did all this accounting stuff. And yeah, so once I started learning about the investment on all those financial ratios, I just asked her like, why there are so many of them? All I care about is debt, liabilities, like assets, and the free cash flow. And she
yeah,
basically told me like it's just to make like ours to look smarter. There's so many ratios you don't ever need, but I don't know, people just came up with so many stuff. And when you're
yeah.
listening to other podcasts and like what's the PEG ratio, like and so on and so far, and I'm like, just tell me what's their free cash flow? Are they positive? Are they negative? Why do you, that? Why is they complicating it so much?
Yeah, yeah,
Interesting. Uh, I never had anyone who used to do any like articles in a Substack. So I'm just curious, like, will you consider transitioning to Substack as a full-time job, or it will always be your like hobby? I know you're not charging anything, right? All your
yeah,
articles are free for now.
yeah.
So
I
is it
don't
in
think
your, go ahead.
I don't think I'll ever charge anybody because I'm very much not a professional. And like I can't really say I can say what's best for me, but I can't say what's best for anybody else.
Mhm.
I don't know. I, I'm a bit of a serial hobbyist as well. So the Substack will be like 4 articles in a month, and then there'll be nothing for 6 months, and then there'll be
Mm,
4 articles in a month. So I think people like regularity. So I don't think people would pay for something like that, anyways.
mhm. Another thing I found is I also started with the Seeking Alpha. So whenever I was researching the stock, I would go to Seeking Alpha, read few articles from the people, and after probably a year, and I don't remember, it was like 2023 or something, I found this thing called Substack just because I've been subscribed to many people on Twitter. They have this link to the Substack, and like what the Substack is, read few articles, and I found the quality on Substack is so much better than in Seeking Alpha. Just for
Mm,
example, in Seeking Alpha, people are just saying like, hey, this is the Intel, this is the depth of Intel, this is the assets, and it's trading at this ratio. And historically, it should be trading at this ratio. So now it's a buy. So they don't tell you like what's going on with the company, who is the CEO, what's their long-term plan. They just tell you the ratios and that historically the ratio is too low, so you must buy it. On the Substack, on the other hand, people are saying like, who is the CEO? What's their long-term plan? Why you should
mm.
invest in what products they are coming up with. I just want to hear your opinion. Why do you think the kind of quality in Substack is so much better than in Seeking Alpha? Or maybe it's just my biased opinion.
I think I think Substack is probably more side like there's probably more better there's probably better articles, but there's probably also worse articles because
Mm-hmm.
Seeking Alpha it's like a bowling alley with the lanes put up. What are
Mm-hmm.
they called? The bumpers are put up. They tell you what they want. Like you send it in and they send back an edited version. And sometimes it kind of changes the meaning of what you were trying to say, or they'll say this is too speculative, which maybe it is, but also sometimes you're just trying to get a read on what the CEO is trying to do, for example, or they try to encourage you to use their resources, like whatever their models, like, oh, and our robot says that this is a good buy, so da, 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 da. It's a bit more of a it's good. Like it's they're both good, but yeah, Substack is a bit. I find if you can curate, uh, uh, you can curate your selection. Substack is a better resource. Although Seeking Alpha is not it's not bad, but it's not it's there's less potential because the barriers are put up.
And I guess you also mentioned that Substack gives you more freedom and Seeking Alpha limits you in terms of the stocks you can cover, right? So you said you
Yeah,
can't cover some microcaps.
yeah. Like you can't cover microcaps, especially Canadian ones.
Mm-hmm.
And if you want to, you have to jump through a bunch of hoops and all that stuff. And they have like a list of stocks that they want covered because they're popular, but people haven't written articles about them for a while. So you'll get like 70 articles on AMD or whatever, and
Yeah.
then you try to submit an article on Cipher Pharmaceuticals when it's $6, and they say sorry, it's too speculative.
Mm-hmm.
And then you're like, okay, see you later. I'm going to Substack.
So I don't know how it works, but it sounds like there is like people who are reviewing all the articles, right? Or it's just done by the bot. Bot just checks that what are the ratios, the market cap is too small, so it's too speculative. Or there is actual person who is reading your article.
There's both. There's
Mm-hmm.
both. It has to tick the boxes, and then there's a person who goes in and reads it
Mm-hmm.
and gives you suggestions. But the person who reads it, there, at least when I was doing it, the quality varies. Editor quality varies. Maybe it's improved since then, but I'm not sure.
Mm-hmm. Okay. So after you did some kind of initial homework on the individual securities, learn a little bit about investing, did you start researching individual companies right away, or you started with ETFs first?
Yeah, I did individuals right away.
Mm.
I I just have an allergy to indexing. I don't know why. I just have
Why?
to do it myself. I don't know, man. It's probably dumb. And I've gotten quite like my stock picks. I've been obviously there's been a lot of work that's gone in, but I've also gotten kind of lucky. So I'm biased. But in the future, I will be indexing more if I'm not willing to put in the time that I did over the
Mm.
last 4 or 5 years.
When I started myself, I was really scared of individual companies. So all I did
Mhm.
is just dollar cost average into the S&P
Right.
because it was kind of safe and I couldn't I didn't have to spend time on reading and I was still doing my research and I didn't want to like spend 2 years just to understand like how financial works and only
Yeah.
start 2 years away from now. So I started with
Hmm.
individual with ETFs. All of my friends who are coming to investment, they also just do ETFs through the RRSP, TFSA because it just they are afraid of the individual companies.
Yeah.
But you went with a unique way. You just went ahead with the individual companies, right?
I'm I don't know. That's just what my that's kind of anyone who knows me. If you ask them, would Stephen safely index first or dive in and go for individual companies? They would all say, oh, he would definitely go for individual companies.
Okay.
Yeah. So, but I mean, I put in a lot of like I just love the challenge.
Hmm.
Like I love the idea that you can go and dig through some paperwork that no one's going to read, uh, because it's like in CDAR from who knows where, from who knows when, and you can click it, and you know that you're one of like 8 people who are reading this thing. I love that idea. It's
Exactly.
fantastic. Like when I said this is like history, like being a historian, like that's what historians do. They go to the archive
Hmm.
and they go read a newspaper from 1912 and find a quote that is pertinent to something or another. That's the skill set, and I I have that skill set, and I love it.
Yeah, I like to think about it myself as being detective. So you have a
Mm-hmm.
ticker, now you have to find out why it's trading so for cheap. Is it because for the real reason, or because the Wall Street couldn't find it, or because
Right.
people are afraid and something happened in the past? And you keep, finding those small puzzles and linking them all together. And if it clicks in the end, like, okay, I know it is really cheap, and just because market couldn't find it
Yeah.
yet. So yeah,
Mhm.
let's go all in. Do you remember what was your first stock that you purchased after you did some initial research on how to do the research on individual companies?
I think the first one I recall is Brookfield.
Oh,
Uh,
wow.
I think, I mean,
You
because
found
it's
a
the
really
big,
complicated entity.
that's exactly like I'm telling you, man. It's like, oh, what's the most complicated thing that no one wants to look at deeply? I'll go take a look at it. And so
Mhm,
that's what I did. I really thought I knew Brookfield. Like I wrote 3 articles for it or something on Seeking Alpha, singing its praises, about how they're
mhm,
great investors and infrastructure is good, and they have the firm's own money in its own funds and da 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 da. And well, then I realized that even though I know like how to read an income statement and cash flow and all that, like these guys are, I sold it because I realized I just have no idea what's actually going on there.
mhm.
So
Oh,
that's part of the growth was to know how much I didn't know. Like
mhm,
like only Brookfield's CFO really knows how their accounting works. Uh, like forensic accountants will sit there, experts of like 20 years will sit there and go do detective work on their accounting,
mhm,
and like they'll like fly to Bermuda in order to get the physical paperwork. Still
mhm.
like yeah, so I ended up selling that one because I just have that was the first one I can remember putting a lot of work in and buying and feeling very convicted, and then ended up selling it.
Why did you change your conviction? Have you read some other articles that convinced you that the accounting is too complicated, or it was just you keep diving into what company
Keep
does?
diving and getting more and more confused,
Mm-hmm.
and then going back and reading about EdPer, which is like the uh, before they renamed themselves Brookfield, they were EdPer, which was the similar huge conglomerate structure where the lower companies paid dividends to the higher companies, which paid dividends to the higher companies, and they were all in debt at various levels, and then one company, the lower company, couldn't. A few companies they couldn't. The whole sort of thing kind of fell apart. Brad and there's Brascan, and it goes back and it goes all the way back to like bootlegging in
Mm-hmm.
during Prohibition. Some guys, a couple brothers, got rich bootlegging, and they owned a bunch of spirits, and then they tried to, then they levered up to try buy a bunch of different like who knows what businesses all went down, and then they became Edper, and then it all went down, and now they're Brookfield, and I can't tell if it's all coming down again because no one can read their accounting.
Interesting. Do you know by any chance? I'm just curious myself because Brookfield is my biggest Canadian holding. Like,
Okay.
it used to be Brookfield Asset Management, but when
Uh-huh.
they were spun out and became just Brookfield Corporation, they just sold BAM and reallocate everything to the Brookfield Corporation. Do you know if
Mm-hmm.
all that happened before Bruce Flatt became CEO or during his tenure?
Bruce
With
Flatt, from my understanding, Bruce Flatt is Brookfield.
mm-hmm,
He when he took over, things changed towards to become
mm-hmm,
Brookfield Asset Management, and then they did it was called BAM for a long time, from what
mm-hmm,
I understand. I wasn't investing back then, so I could be, but from what I remember that, and then recently in the last couple of years, they spun out the asset management because they
yeah,
thought it deserved a higher multiple, and then BN became the corporation, which is their own capital and everything that they have invested. So
mm-hmm,
it's like a giant balance sheet, which they and then they but they and then they have distributable earnings,
mm-hmm.
which it's like supposed to be free cash flow or whatever, but I can't figure out how they reconcile it beyond like what's on the first, and a bunch of experts can't figure out how they reconcile it. And like for example, one of the things I can't remember the time that I really kind of stopped following it was they had like 9.8 billion in distributable earnings, and the
Mm-hmm.
headline on the report was 10 billion distributable earnings. They just
Mm-hmm.
rounded up onto the headline, and I
Mm-hmm.
thought you can't round up 9.8 billion to 10 billion.
Yeah,
That's 200 mil.
yeah, too much.
Like you can't round 200 mil. It doesn't matter if it looks close on paper. Like you just can't. So I kind of stopped following after that giant rounding thing to try and get a nice headline on a quarter.
Yeah. Uh,
But they might be what they say they are, and I just don't know because I can't verify for myself.
yeah.
Whereas something like Cipher Pharmaceuticals, they just beat lice and whatever, and then make money and make tons of cash doing it. And so
For
that
CPH
I can
reporting
understand.
is so much easier, right?
So much easier.
Yeah.
Yeah.
In my case, I start investing in a BAM, Brookfield Asset Management, just because of the dividend yield. So at that time, I didn't know anything about looking at the CEO, the financials. I was like, ratios, guys. What's the dividend yield? What's the payout ratio? Okay, I'm
Right.
sold. Let me buy
Right.
this. And then I start hearing all those people saying like accounting is too complicated. And I have no idea what the accounting was. I just know the dividend yield, what the dividend yield was for the
Mm-hmm.
Brookfield.
Yeah.
And I got scared myself and like, could it be a fraud? And then I discovered this podcast called the long-term investment. Not sure if you've heard of it.
Who is that? The Baskin Wealth one?
Yeah, yeah.
Oh, okay. Yeah, those guys. Yeah.
Yeah,
Uh,
I've listened few of the episodes about the Brookfield, about the CEO. At that time I didn't even know who the CEO was. And I got sold. Just they told me like it is complicated, but it's multi-billion company, and whoever do the accounting, they figure this out. But for retail investment, it's too hard. And I haven't sold.
mm-hmm.
The only thing I did is I migrated all my funds from Brookfield Asset Management just to BN.
Right.
And yeah, it's like, I don't know, 3-4 years passed. Now it's my biggest position. I never
Right.
trimmed. I just reinvest all the dividends. And yeah, it's just
Yeah.
a compounding effect. 4 years now, it's my
It's
biggest position. And I don't even add,
well, I
I
mean,
just,
you've done great. You've done
yeah,
great. Yeah.
yeah.
That's fantastic.
Let's hope it's not a
Um,
fraud and first lot is
who
real
knows? Like, who
liquidity.
knows? Even the guys on Baskin Wealth don't know.
Mm-hmm.
They
Too
don't know.
complicated.
Uh, it's unlikely to be, but it's the whole private equity world, like the whole, I mean, lower interest rates over time. Their whole thing is just leveraging up to buy businesses,
Mm-hmm.
improving them, and then selling them 5 to 7 years later. And if interest and it's a little bit interest rate dependent.
Mm-hmm.
So how interest rate dependent? We don't know because it's private equity.
Yeah.
It's private credit, uh, and they're up to their eyeballs in it. So who knows?
Well, let's hope. uh,
Let's hope. Yeah,
I am curious. So, as a fellow Canadian, when you do the research, do you prefer searching for a Canadian listed company, or you don't care? Just like start somewhere and you go over, and you don't care where the company is listed in.
yeah. I don't really care.
Mm-hmm.
I'm unfortunately I live in a jurisdiction that IBKR doesn't serve, so I'm
Mm.
kind of limited to North America, um, unless I want to pay enormous fees through my traditional bank. But yeah,
Interesting. Why is it the case? I remember talking to you on Twitter saying that you can use APKR, and you told me like your province is not supported. Why is it
yeah.
so much difference? Like I live in BC and IPKR support BC. Why is it don't support your province?
I
It's
don't
so
know.
weird.
I mean I live in the north, like
Mm-hmm.
the territories, and for whatever reason they don't. I looked into it, and basically all anyone could tell me was it's the rules, and then I couldn't find the rules.
Mm-hmm. So you're basically using the Bell Simple and a Quest rate.
Yeah,
Okay, interesting. Yeah, thanks for some background. Now let's
yeah,
talk about your biggest positions. I guess
sure.
we have limited time, but we can go from the top, like your highest conviction, to the bottom. And
Yeah.
I will give you some of my perspective because all of your holding are something I used to own or I still own.
Okay.
So yeah, go
Cool.
with whatever order you like.
Yeah. Oh, let's go from the top to the bottom.
Mm-hmm.
I think it's TerraVest is first, which that one I bought like 2 or 3 years ago, and
Mm-hmm.
it's up. I mean, it's up like 8x or whatever since my initial buys, and I've averaged up the whole
Wow,
time.
so jealous.
It's been. I mean, I got so lucky knowing
Mm-hmm.
being interested in Canadian small caps while my accounting and investing knowledge was reaching a point where I could tell what things are. And
How did you find a small Canadian cap that is only listed in a front
I
exchange?
did a I did a screen for like cash flow, profitability, and low multiple, and it popped up. And I typed the ticker into Twitter, and somebody had written an article about it. I read the
Mm-hmm.
article, and then I did my own thing. I emailed Dustin Hall one time, and he emailed me back,
Mm-hmm.
and then
And
I just
Dustin
did
Ho
my
is the
research.
CEO, right?
Yeah,
Okay.
yeah. So I should. People watching may not know that. Yeah, the CEO Dustin Hall, he emailed me back explaining some things. I talked to some people who talked to him in person, um, who told me really great things. Especially like in relation to like comparing Constellation software and
Mm-hmm.
TerraVest. Constellation software being the the software Berkshire Hathaway, and then I so I ended up investing a bit, and then every earnings report it was like, oh, these guys are good, oh, these guys are good, oh, these guys are good, and then over time, I think the last buy I did was at like $88. My first buy was at 20,
Mm-hmm.
22. My last buy was at 88, and it's just it's like 10% of my portfolio by cost, but it's become like 30% of it by market.
Wow. I
Yeah.
discovered TerraVest when it was already trading at I believe 70, like $70-ish, because so far I'm up 100%, and the
Mm,
stock is trading at like 140 as far as I remember. Same
right.
thing. I didn't know anything about it. It just started popping up in my Twitter tweet.
Right.
So I think you posted something about it. Other people posted.
Probably.
There's a podcast called Canadian Investor Podcast,
Sure.
and they also mentioned the TerraVest. And like, okay, I hear this name too much. I need to take a look at what it does. And yeah,
I also live in a town that uses all its stuff.
mm-hmm,
So like it's a tiny town. Like we use oil burning furnaces, and
mm-hmm.
we have fuel tanks. Our entire TerraVest makes all the fuel tanks for my entire town. So like
Wow.
the school TerraVest tanks heat the schools. It's
Mm-hmm.
heating the building I'm in right now. Then they have the
Wow.
furnaces. Like my house has a Granby furnace in it.
Did you know it before you invested in TerraVest or after?
It was about the same time I was looking at their brands, and I was like, Granby. Wait a sec. I go outside to look at my fuel tank. Hey,
Wow.
that's mine. It was in my email to Dustin. I said, hey man, like I've invested a little bit in your company partially because you make the stuff I use all day.
Mm-hmm.
You guys keep my town warm in the winter, and so even the garbage truck now. They made an acquisition of Heil trucks, or
Mm-hmm.
one of the brands that they bought is and the garbage truck in my town is a Heil
Mm-hmm.
truck. So
Interesting.
it's a close one to me. It's not a ethereal. It's a really like it's something I can reach out and touch. So it's very easy to invest in.
You see their products in a daily
Yeah,
basis.
and you see their moat. Like nobody is making fuel tanks.
It's not AI, right?
Yeah, it's not. It's definitely not a data center. Yeah.
Yeah. So do you think the upside is still big from the current levels? Because I guess many people already know what TerraVest is. The multiple is a bit low, and I guess it's because it's trading in Toronto Exchange, and like big institutions from US can't reach it out. But do you believe there's still like things they can acquire in Canada, or they will keep acquiring something internationally?
I think they have a huge uh, pathway for acquisitions, but the multiple is pretty high
Yeah.
relative. But maybe that's my bias because I was buying it at lower multiples, but I haven't been adding, no.
Mm-hmm. But you're not,
Especially because it's already so much in my portfolio. I wouldn't really add anymore. Anyways,
yeah. But you're not planning to trim anytime soon, right?
not planning to what anytime soon.
To trim the TerraVest.
No, That's one of the things that my style has become more of the sidecar investing.
Mm-hmm.
Like there's that guy on Twitter who called it that, and
Yeah,
based
I know.
based off of a paper that he read,
Mm-hmm.
and I think it's a really good analogy. If you feel like you want to trim the winners, but like it's going to double again in 5 years. They're going
Mm-hmm.
to double cash flow again 5 years from now. And then the 5 years after that, there's a good chance they do it again. For as long as Dustin's there, the CEO, his options expire in 2032, and that's the year 2032, or whenever we find out whether Dustin's staying on or not, is the year
Mm-hmm.
I will consider trimming.
Okay. For now, do you look at the every quarter report from TerraVest, or just like as long as the CEO is on board, I don't care. I will just hold the company.
I still look at it. I probably don't need to.
Okay.
I still look at it.
Going back to the Tom Hayes, as long as the CEO is great, like
Yeah, but you
it's
trust but verify. Trust but
yeah,
verify.
trust and verify.
Yeah.
Okay, interesting. Yeah, you don't hear many people whose biggest position is something non-AI and data center related.
Right, right.
So yeah, TerraVest number one. What's your second position?
I think it's become Cooper standard. I
Yay.
think.
My biggest position so far.
Okay. Yeah, that's a Tom Hayes hedge fund tips pick right there.
Exactly. No credits to
He,
me. I just copied what he said. It
yeah,
just made so much sense to me. And I think, what's your basis point? When did you start buying the Cooper Standard?
$11.
$11. Okay. I started at around like 8, 10,
Okay,
and then
nice.
16, and then it went down to 12. And I was so scared. Like, I don't understand anything about the company. Maybe it's going bankrupt. But I had to rewatch all of his videos about Cooper Standard just to, make sure I understand what's going on there and don't
Yeah,
panic sell everything.
it's an auto parts company that for
Hmm.
viewers, like it's an auto parts company that sells to the OEMs. So if the more cars they sell, the more money Cooper Standard makes. And coming out of COVID, COVID nearly closed the doors
Hmm.
on their business, but they managed to muddle through it with tons of cost cuts. So they're a lot leaner and the operating leverage is a lot higher. So as soon as volumes increase, which will happen when the rates go down and people and families start buying cars again, then they're going to start minting money. And that was Tom's entire thesis. And I bought it after after they got the refinancing
Hmm.
that they were either going to go bankrupt or get the refinancing. And so I bought it after the refinancing.
Hmm.
I couldn't understand how Tom bought it at like when that was still a risk. Um, but then I learned, listening carefully to his podcast, that he has friends who could loan to the company if they didn't get the
Ah.
refinancing. I was like, okay, well, I'm not on that level.
Okay.
I wish I'd known that before, but yeah.
We are just retail. We have a
Yeah,
limited
exactly.
resources.
Yeah.
What
So it's
I
gone up a lot too. Yeah. It's pretty good.
So for listeners, I think the current share price is around $38, right? It haven't
Yeah.
reached 40 yet.
I held it for 2 years doing nothing, and
Same.
now it's like tripled or quadrupled in the span of like 3 months or something, or
Hmm.
whatever it's been, 6 months. It's wild.
One thing that I learned from Tom Hayes' podcasts is take a look at the number of shares outstanding, which
Yes.
I kind of didn't ever look at before.
Mm-hmm.
And what's interesting about Cooper Standard, even they were like a higher risk of bankruptcy, they didn't dilute shareholders. They just refinanced their debt. So the number of shares, I think it's even went down a little bit since the COVID levels.
Yeah, it's amazing. I
Yeah.
mean, they still have like 20, I think it's 23 million shares outstanding,
Hmm.
which is incredibly low
Yeah.
for a company. Like, uh, so yeah, I mean, your EPS, like for example, they got new business. Like something will say like, oh, we booked new business for like some random rubber sealing thing in a car that have to Google like car parts to find out what the hell what the heck this little rubber thing even is, and it's like $60 million worth of business or something. It's like, oh, 60 million bucks on 20 million on 23 million shares.
Hmm.
Oh, that's material to
Hmm.
eat. Um, so it's pretty cool.
Yeah.
Yeah, low
Yeah.
share count is very strong.
I think for listeners, I would like to emphasize that Cooper Standard has higher margins on a hybrid and electrical cars.
Yeah.
But I tried to find this information. I asked GPT, I was looking at in Google whether Tesla has anything to do with the Cooper Standard. I didn't find the official information from the Cooper Standard ads on any of their filings, but ChatGPT keeps telling me that yes, Tesla is using parts from the Cooper Standard. So I'm not sure if you have like more information than I do in this perspective.
The only thing I know is that there was one podcast on that Tom Hedge Fund Tips with Tom Hayes. He mentioned he was going through one of the decks and it had all the brands, and he said, "Yeah, see, they serve all of them, and also Tesla, but there's some sort of copyright issue where Tesla doesn't want their brand put in the decks."
Maybe that's why. Yeah,
And
I
that's it.
couldn't find it. Like
but that's my only information. It might be right, it might be wrong, but Tom tends to be right.
okay. And for the listeners, and I guess I have this number in mind, but when are you or will you ever sell Cooper Standard in the future?
That's such a good question. I talked to my wife about this too,
Hmm.
because if it this is I'm planning on holding everything for as long as I possibly can, except for
Hmm.
Cooper Standard. This
Hmm.
is my only one that is something of a mid-range trade, not a
Hmm.
pure investment. And so I would, I mean, $10 a share in earnings is what is the conservative estimate of what they can earn on a normal cycle. And so that's 100 to $150 a share if you get $100 if it's 10 times if it's 10 multiple 20 200 if it's a 20 times multiple $150 as the I would sell it 100 probably but like $150. Well, 100 150 I don't know. The emotions are going to get involved, but my rational brain right now says 150 uh, as the company is now. But if something changes and the fundamentals improve even more, then it might go up from there.
So for the listeners, before COVID, when people were buying cars normally, like in a normal cycle, when people are buying new cars, Cooper Standard EPS was, and I might be mistaken, was around $4 per share, right? And the stock was trading at around 170. So around 20x multiple on whatever Cooper Standard was earning before COVID. And
Yeah.
as of today, and I don't believe it's official wording from management, but Tom Hayes' model saying that the Cooper Standard could earn on normal cycle, considering they did a lot of the cost cutting, they can do $10 per share. And if you give it 20x multiple as pre-COVID, it is what, like 200 stock? But
Yeah.
being conservative, like it's not a AI stock, right? So the multiple should be a little bit lower. So if you give it 10x multiple, it will be a $100 stock.
Yeah.
So you will
Yeah.
start trimming at around 100, right? Or you'll be waiting for like 150 or something.
We'll get to 100 and I'll take a closer look for sure.
Okay. I hope it's in your TFSA account.
I actually haven't checked in a while. I think it's I don't know. I don't know.
Okay.
Yeah,
Yeah. I
I don't know.
discovered Cooper Standard already when my TFSA was maxed out. So all my shares are in
Too
a
bad.
taxable account.
Too bad.
Yeah.
It's
So
it's good for holding them though.
yeah.
It'll prevent you.
Well, I have the same perspective. I am going to sell and start trimming at around 100. Maybe I will sell like half when it reaches 100, and then another half I will be looking at like what's going on. Could they ever get the 20x multiple in the future?
Yeah,
But
and things could deteriorate too. So you have to like there's obviously a probability that something bad does happen, and so you have
yeah,
to be ready for that as well.
like with today's economy, I don't believe like this year or next year it's a time when Cooper Standard reaches 100. Like the job reports in America keeps going down, so I don't believe people will have spare cash to keep buying new cars in the near future. Like maybe not
Who
in the next
knows?
like 1 2 years. But
Yeah, I mean, who knows? Cars are. I mean, I have two small kids, and we're thinking about buying a car.
mhm.
My parents just bought a car.
Yeah, that's the thing. Are you going to buy a new car or use one?
I don't know. I mean, I love buying stuff. I love value.
Hmm.
I love that mantra: price is what you pay, value is what you
Yeah.
get, and I apply it. I apply it all over my life, even
Hmm.
before I knew the mantra. So whatever. If a new car is good value, you'll get a new car. If an old car is good value, you'll get an old car.
Interesting. Yeah. Another thing is, as I said, Cooper Sanders is my biggest position, and my wife sometimes asks me like, "What this company even does? Like, why you're not invested in Tesla or Nvidia?" It's so hard to explain.
Just send her a link to hedge fund tips.
Yeah, like she will probably give up. It's like how much, 10 hours
Yeah.
just to cover the Cooper Sanders.
Yeah.
Okay, so it's good that you have the diversity in the Canadian stock market. So you have a
Yeah.
TerraVest, and then you have Cooper Standard, which is listed in
Mhm.
a New York exchange. So
Mhm.
what's your third biggest position?
I think I don't have it up right now, but I think it's the topic the Constellation software family.
Hmm.
I think it's Topicus and Lumine. I think combined they're actually as big as TerraVest. I think they're both
Hmm.
about 15% each or something. And that's a fairly well known thesis is the vertical market software things that no one can ever get rid of, even if they want to, and you can continue to increase prices and
Could you tell
acquire.
what is the vertical software market for those who don't know?
Yeah, it's this type of software that runs on. It's like Microsoft Word is horizontal because everyone uses it for whatever, and it's uh, tr everyone's trying to make a new Excel. Google's trying to make Sheets. Da 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 da. But if you go to like your auto parts store and they have an inventory software that looks like it's running on like a 1980s computer, that's vertical market software because they would have to take all their inventory and put it all back onto the thing, onto this one particular thing that's for their store, for their inventory. And that's vertical market software. And they charge them a subscription fee and collect it and raise it 3% every year or whatever. And take that and then take all that subscription cash and then buy more of those. And they're just experts at it. And the moat and you think the first question that comes to people's mind is why can't anybody just do that? Sounds pretty easy.
Especially nowadays when you have an AI.
Exactly. Like, why can't everyone just do that? And well, everyone can't apparently because people have tried and they find it really hard to scale and consistently make a high percentage make good acquisitions. And the real magic from what I've been able to learn about the Constellation software culture is the learning and the distribution of the knowledge where they've basically, I mean, there's Mark Leonard who figured out the strategy and he taught it to a bunch of people who were able to teach it to a bunch of people who were able to teach it to a bunch of people. And then the people on the bottom are able to implement it with the same or similar effectiveness as Mark Leonard did. It's like it's like Buffett. There's only one Buffett, and Buffett really, like, no one's been able to replicate him. But Constellation Software has been able to replicate Mark Leonard, which is just kind of astonishing. How do you get an organization of people who can all invest at ROICs of 20 to 25%? It's unbelievable. Part of it is because vertical market software is extremely economical business, but
it's really sticky business.
Yeah, but their culture is something. The people and their structure and their culture is something that I think gets overlooked. But that being said, I'm still a kind of value guy. I bought Topicus and Lumine largely when they got spun out of Constellation. And that was a great situation because Constellation spun out Topicus onto the venture exchange. So all the huge funds and index funds who held Constellation software on the TSX or whatever in their funds had to sell the spin because they have rules against owning it on the venture. So all of a sudden you have Topicus, you have Constellation software trading at 30, 40 times cash or whatever. And then you have Topicus trading at 15 to when it spun out, it was trading at like 15 times cash or something. And it was the same business, but in Europe. It was a no-brainer. And then Lumine came out, which is another spin-off, slightly different DNA, I think. A bit more grindy. We can talk about it. But it was the same thing. Again, trading for 15 times cash on the event. And I thought, this can't happen twice, can it? And so I put way more in it that time. And
it did happen.
And then it happened again.
So you never owned Constellation before, right? You just started with a spin-off.
Yeah, I've never owned it.
Okay. Constellation used to be my biggest position just because of Mark Leonard. Like, I listen all the people who told me like who he is, some of his interviews, and like, wow, this guy is like a wizard. He literally looks like a wizard.
I know, it's amazing.
But I saw recently because I couldn't justify the multiples, or it just became too high. But after the spin-off, I did get my shares of the Lumine or the Topicus. I didn't understand the Lumine business, so I sold it and reallocated everything into the Topicus. So still holding Topicus.
Same thing.
Another thing,
similar enough.
Another thing is, and it's a little bit weird. On my LinkedIn, like all of my connections, they are in the software industry, right?
Right.
I never found anyone from the Constellation family, like any software developer who are supporting those vertical market softwares. I never found anyone. I have no idea
Interesting.
why.
Huh.
Maybe the
Yeah, I've
software is so
never.
old that people never heard of the LinkedIn before or something.
I mean, that is curious, isn't it? I don't
Yeah,
know.
no
It
idea.
The really interesting thing about that vertical market software is that it might be a huge beneficiary of AI, despite
Hmm.
being people fearing that AI is going to replace it. Uh, it might be a huge beneficiary because it gets to implement it and get a lot of the efficiencies.
Exactly. Yeah. So when people
Who
tell
knows?
me something like Topicus or Constellation will be disrupted because you can literally rewrite the same software using I don't buy it. I know
Mhm.
it is easy, but then you have to retrain your stuff. You have to deploy it somewhere. You need a guy who will be looking at the deployment, monitor that everything goes well. Something
Yeah,
goes wrong, what happens? You just say I fix the bugs, or you'll need an actual person to take a look at the business process and see like what went wrong.
right,
But for the people who are writing the vertical software market, it will be a little bit easier because now they don't have to spend so much time looking at this legacy code. They can just
right,
ask AI, like, let's add this new feature.
right,
The AI will give you a feature, and then you train your staff on how to use like a
right,
new feature on the software.
right.
So in terms of the Topicus, so it is primarily based on the Europe, right? I don't know about
But
you, but I don't really understand how the European market works. Is there any,
I,
have
I
you ever?
never believed that though. I wrote an
Mm,
article on Topicus for Seeking Alpha. It says we're going to be European based, and I said in it, I said, at the end, I said, I kind of doubt they're going to stay European based. And lo and
what,
behold, they made Asian acquisitions and they're starting a South American division. So yeah, the European one, but the European one is right. Like, I don't know. You've been to Europe? Have you ever been to
yeah,
Europe?
yeah.
Yeah. Okay. Yeah. I mean, there's so, there's such a density of languages and cultures, governments and systems, all these different procedures, laws. They're all different. I mean, it's got to be. It's there must it, the market. I don't know. There's got to be a lot of hunters out there, but there's got to be a lot of targets as well because Poland's going to have a different thing.
Hmm.
Is going to have a different thing for their accounting versus the Netherlands versus Germany versus da, 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 da. Whereas in North America, it's like, oh, there's Mexico, Canada, and the States.
Hmm. And
Uh,
in terms of the structure, do you know if Mark Leonard has any voting power in terms of what Topicus is doing in terms of their acquisition, or it's primarily the CEO of Topicus makes the final decision?
you know, I'm not exactly sure.
Hmm.
I know Constellation has that big voting share or whatever it's called,
Hmm.
and the share structure is a little bit funky, um, but I'm not too worried about it.
Okay. Yeah, their acquisition in Asia was a little bit surprising to me because in my head it was just Europe. The So the European market is a bit different than North America in terms of it's really slow. And if there is a vertical software market, I'm pretty much sure it will never be disrupted. So maybe in North
Yeah,
America it is a case. Yeah, like you can
right,
have a startup, it will write something. But in Europe, everything is so slow. It's just my
right,
biased opinion. People will never switch from something like really old from this
right, right,
vertical software market. They will keep using it like till the end of the
right,
days.
right.
That's basically all of my take in terms of the topic is just focus on Europe, keep buying those small companies. They
I
will never
see.
get disrupted.
Yeah, that's a good. Yeah, I mean, You can email someone for work in Europe, but during the summer, and don't expect a reply till September.
Exactly.
Yeah, I imagine. So yeah, you take that vibe and bring it to software. Then yeah, I
Hmm.
think you're probably. I mean, you know better than me, but I think you're probably spot on.
Okay. And in terms of the Lumine, like, could you share a bit of your thesis, or you just bought it because the multiples are way too cheaper than Constellation?
Oh, I mean, Constellation's a beast, and they spun out another thing, and so I mean, I looked it up. Their business model is a little bit different.
Hmm.
They tend to do bigger ones. They're less decentralized, and they tend to do more turnarounds. buying stuff out of bankruptcy or turning some. So it's a little bit like like Topicus is going for organic growth. It's trying to look sexy and whatever. And
Mm-hmm.
Lumine is like, we're going to go through the bankruptcy filings, and we're going to find this thing, and then we're going to turn it around. We're going to give it a shave, put a suit on, give it a resume, and this is going to look great.
Mm-hmm.
And it's two different flavors, I think, of Constellation. That's all I think.
Okay.
I'm happy with both.
Okay. Yeah. So we still have some time, and I am curious. So now we know your top three, or let's say, well, let's call the Topicus and Lumine as the one entity. So we know
Yeah.
your top three positions. Could you tell listeners your kind of process on how you do the research? So we know the top three. How did you start? Like you said, you found some articles, you read them, but I don't think you jump into the decision of buying the stock right away, right? You
No.
read some papers or you read some financials. Like, could you explain this process if you have one?
Yeah, it's everyone is slightly different, but you just gather as much information as humanly possible. And I put it, uh, talking to people is pretty important. Like the
Mm-hmm.
scuttlebutt, finance uses the word scuttlebutt like, to
Mm-hmm.
talk, like trying to find out rumors or whatever. Like, oh, I heard it, and trying to um, going through the financials, truly understanding the financials. Going if they have a product that you can use, trying to find the product that and try it out. Um, Trying to talk to customers, trying to talk to clients, like all that. You try and do all that stuff as much as you can, and then including making a model like a DCF, fully. I'm not like a fancy bank analyst who's going to model out every little tiny change or
Mm-hmm.
whatever, because it's not my job to do that. I just need to know enough for it, and
Mm-hmm.
so make a DCF and see what the intrinsic value of it is, and see what and then check to see what a reverse DCF to see like what's it pricing in, and
Mm-hmm.
if it's reasonable, then start buying, and if it's not, then just wait.
Will you ever consider buying a company which is already priced for perfection, but the moat is really great?
Oh, it would depend on the company, but I haven't been adding TerraVest. I haven't been adding Topicus. I haven't
Mm-hmm.
been adding Lumine.
Yeah.
I haven't been adding Cooper Standard.
Mm-hmm.
Um, yeah, another one I own is QXO, like the Brad Jacobs
Yeah.
home building supply, which is the same vibe as all these other ones.
Same here.
Yeah, but again, I wouldn't be adding that one. It's run up a lot because you introduce valuation risk. Like I saw one like if the market has a cold and your stocks are overvalued, then you might get pneumonia. I thought that
Mm-hmm.
was pretty good.
Yeah.
But so no, I
And
wouldn't. I, value matters to me. It's fine. I'll find if something's priced for perfection. Then in my mind, I kind of let it be, and I'm sure I'll find something.
mhm.
Just keep looking.
So your companies are kind of unique because not many people have ever heard of them. So I'm just curious if the company is something that public knows really well. So let's say Nvidia when it was pre-split 900. Have you ever invested in some of those companies that like a lot of retail investors already know about, or you're trying to find the hidden gems?
I mean, there was a time when, uh, like, I did like Meta and
Mhm.
Amazon. What I mean, I've owned over 100 different companies at
Wow.
least.
I,
Just
I don't know how you did it.
I've just bought
I have
like
like 20 and I'm already stressed out.
buying and selling over the last. I've been doing this for like 4.5 years. So the
Mhm.
learning process, starting with small amounts of money, buying and selling, and learning and learning and learning, and starting in 2021 was really good because the market went down the whole time for like
Mhm.
2 years. So you actually got punished for mistakes.
Mhm.
Like if you made an analytical error, and we had less money at the time, so it was an absolute small mistake as well.
Mhm.
You would it would be like, and you made if I made an error in my analysis or read the cash flow statement wrong, uh, then the stock went down. It wouldn't go
Mhm.
up just because everyone thinks it's cool. Everyone was super bearish. It was a
Mhm.
bear market, and so you actually got feedback from the market rather than like hyping you up. Where
Mm-hmm.
the worst thing that could have happened was I make a bad decision and it works out. Then I wouldn't have learned anything, and I would
Mm-hmm.
have lost, and I would have put myself at risk of learning of losing bigger money later down the line if I
Mm-hmm.
hadn't got that feedback early on.
Yeah, learning process.
Yeah.
Yeah, but 100 securities, guy.
Well, it's just putting in reps, you know.
Yeah.
I mean, I read all their annual reports. I modeled. I have a
Mm-hmm.
folder that has like 100 different things on it. All of them have models,
Wow.
and
That, that's
and
what I call dedication.
it's just the learning process, like putting in the reps, getting the pattern recognition,
Mm-hmm.
and now it's at a point where like I see QXO, it's like okay, let's go, or whatever, you know.
Mm-hmm. Do you have any opinion on crypto? Just out of context, just curious.
I don't think that hard about it, honestly. I don't know. Maybe it's the next big thing. Maybe it's not. I'll stick to fuel tanks that keep me warm in the winter.
Okay, fair enough.
Yeah.
At least I can touch it, right, and see what it's
Yeah,
doing.
exactly. Like, oh, there we go.
Mm-hmm. And you're not
Yeah.
doing any trading, right? All you're holding are long term, don't touch it, let it grow and compound.
I don't do any trading. I mean, I read a story that there's some guy in Chicago, there's some office hedge fund in Chicago or whatever that got its own optic fiber line wired into the trading
Yeah.
exchange so they could get a 2 millisecond on it on somebody else. Okay, I'm not gonna play that game. I mean, long term, the biggest advantage I have
Yeah.
as a retail person is
Mm-hmm.
the ability to think I don't have a job tied to my performance
Mm-hmm.
of my things. So I can think 5 years down the line. I can say Dustin Haw's a good guy, CEO of TerraVest. He's smart. 5 years, he's going to double the business 5 years from now. And then that's it. It can go,
Mm-hmm.
I can be wrong on all my assumptions for 2 years, and then he'll fix it and go up, and in the next 3 years it'll double. Whereas if I'm a fund manager, I'm thinking about my bonus at the end of the year. I'm thinking
Yeah.
about keeping my clients. Um,
And
I'm not allowed to own venture exchange stocks because some rule somewhere in our fund rules says I'm not allowed to.
mm-hmm.
Oh,
Yeah,
mm-hmm.
my first interview I had was with Henry, and he's really bullish on the upstart. We also talk about this topic, and I guess the main benefit of retail investor is you are managing your own money. You don't have to explain your thinking process to anyone. It's your money. If you're a
Yeah.
hedge fund and the people see that your performance is slower than S&P, they'll come after you and say, "Hey, what do I be paying you for? Like,
Mm-hmm.
liquidate, give us our money back." But if you're
Yeah.
retail, you don't care. You have as
You don't
long
care.
time as you want,
Yeah.
right? You don't
Yeah.
have to. And in terms of Tom Hayes, I can't imagine how he's doing it. Like his thinking process is so good, but there will always be a human factor. So some people could start like being super bearish and say, "Hey, liquidate everything, sell QXO, sell Cooper Standard," and they will never get those returns when the Cooper Standard will be on $100 per share.
Mm-hmm. I
Really hard
imagine
to.
being a fund manager is uh, a lot of relationship management and
Mm-hmm,
attracting the right type of client in order to make your job tolerable.
mm-hmm,
I think you have to be really good at attracting the right type of client and being good at
exactly.
managing relationships, which
I
is why I'm
imagine,
never going to do
yeah,
it.
the like I know really little about this industry, but I imagine all of their margins are coming from the volume, right? The more clients you have, the more money you can get. But the
Yeah.
more clients you will get, you don't know the quality of those clients, how good they are, like what's their psychology, what's their
Yeah.
long-term thinking. Yeah, too hard. Also, not for me. Never.
Yeah.
Managing my own money is also a bit stress, but managing someone else's money is like too
Mm-hmm.
complicated.
I know. I gave a stock tip one time to some guy like 2 years ago. I don't think I will again.
Oh,
It went. It was Cipher Pharma. It went.
mm-hmm,
It was out. They did the acquisition of their specialty pharmaceutical company, and they basically doubled the size of their business,
mm-hmm,
but with an acquisition that was really good. They went up to they were at 12. They were at 12. I bought it. I told the guy about it. He waited till 16 to buy it. It went up
mm-hmm.
to 18. He was emailing me really pleased, and then went all the way back down to 12. And then he emailed me. I sold. I guess they don't all work out, eh? It's like, okay. And now it's almost at 17 again.
Yeah. Same thing with Cooper Standard. So I told a few of my best friends that, okay, my biggest holding is the Cooper Standard. I didn't even know like that I shouldn't have told them, because what they did, they just went ahead and bought some shares. And now every time the market goes down like 2-3%, they ask me like, hey, what happened with Cooper
I
Standard? Why
know.
did it down 3%? And I'm like, I have no idea.
I
Like,
know.
if you hold it,
I
just
know.
hold it. Like, and they're like, are you selling? Are you selling every day? My God, I
Yeah.
shouldn't have said it.
Yeah. Indexing.
Yeah,
Indexing is for those people.
just index and chill.
Yeah. Yeah. And unless you're willing to like learn accounting and financial modeling and willing to like become sort of a historian of companies,
Hmm.
uh, yeah, just index.
Okay, yeah, I think we are almost out of time. So thank you for this podcast. It was really interesting to talk to you. You have a lot of same perspective as I do.
Mm.
Before we go, I usually try to ask people if you would recommend any like latest books you read or any TV series that you are watching to the listeners.
Oh, any uh
It could be outside of the investment.
you
That
know, it's gonna be a unique one, and my wife will make fun of me when I tell her about it. I've
okay.
been uh I've been learning about ancient Mesopotamia and Babylonia,
Okay.
way back in like
Hmm.
the advent of writing type thing, and learning how to. One of the first things they ever did was write down receipts and stuff like that, and there are whole books about the economy of ancient Mesopotamia, and they have, and you can, they had you can they had interest rates that you can read
Hmm.
from on the receipts. They were loaning back and forth. They had traders who were writing down what they were trading for how much, and then in Anatolia, like modern day Turkey, and then they would come back and they would record it. And they had stock venture companies in ancient
Wow.
Assyria that you could that sons would inherit. They would inherit shares from their fathers, and it's all written down in
Hmm.
cuneiform. So like kind of contemporary with like Egyptian hieroglyphs in
Hmm.
Mesopotamia. They're using cuneiform, and there are books on this stuff. Um, and if you want to, you can learn to read the cuneiform, which of course I'm trying to do because I think it's kind of fun. But uh, I mean, there's a whole thing where specialization. People think of economic specialization in terms of like David Ricardo and Adam Smith and all these Scottish dudes who come up with the free market, invisible hand, whatever. But you go back to like ancient Sumer, and there's a king who he's like, okay, these guys are really good at sheep. These guys are really good at wheat. These guys are really good at this, and he specialized all the cities. They called it one country, one city, or one, and and then you have records of this entire economy, a specialization economy,
Hmm.
um, working, and private households who have stacks of cuneiform tablets for how many sheep they sold to this, or how much silver they loaned to this guy for the slaves for
Hmm.
this guy. Um, and there are, I found that's been like I told you, I was a serial hobbyist in the humanities type of stuff. If
First
you're a
thing that
stock,
comes to my mind, how they are doing the security stuff when everything is handwritten.
it's amazing. It's
Yeah.
it's given an intent, a very it's an off the beaten path recommendation, obviously, but the
Hmm.
books about this thing, there are tons of books about the Assyrian traders, and there are lots of books about ancient Sumer economy, and or just Wikipedia or whatever. But it's a really good perspective to modern investing
Hmm.
and modern economics, modern business, that I've actually found very helpful to just like picking stocks.
Going back to the root.
Going back to the root, to
Yeah.
the very root.
Interesting. Maybe I will give it a try. Not learning like how to read it, but just like the
You
history,
would,
how people were doing it.
yeah. The Assyrian traders are a good intro place to start for sure.
Okay.
Because they're also like love letters in between them. In
Hmm.
between, there's a receipt. Then the wife will say, "Oh, husband, you've been gone for 2 years. I miss you so. Will you please come back and leave your new wife over there?" so there's
Wow.
so there's a lot of personal stuff that keeps you involved, and then it's like, okay, receipts, receipts, receipts.
Hmm. Interesting. Yeah, it's a good perspective. Thanks for
Very
recommendation.
much, very much.
Okay, so thank you. Before we go, any final words?
That's it for me. Thank you so much for having me. This was great.
Yeah, it was interesting discussion.
Yeah, 100%.